How the digital service tax impacts big tech and what it means for you big tech taxation insights. It's the morning of January 24th, 1848. At a small sawmill along the American River in California, an operator named James Marshall notices some shiny flecks in the water. Word spreads quickly and soon the gold rush is on. San Francisco, once a sleepy village of just 200 people, explodes into a booming city of 36,000 almost overnight. But here's the kicker. While prospectors flocked to the west to find gold, the real winners weren't the miners. They were the savvy entrepreneurs like Levi Strauss, who made fortunes outfitting the 49ers with tools and clothes. And they did all this without paying a single dime in income tax. Now, fast forward nearly 200 years. The new gold isn't buried in rivers or hills. It's in the data we produce every day. A new breed of modern-day miners, companies like Google, Facebook, and Amazon, are mining this data to fuel one of the most profitable industries of the 21st century, digital advertising. But unlike Levi Strauss and the gold rush merchants, today's companies face a much more complex challenge. How do governments tax this new kind of wealth? The rise of the digital service tax. In recent years, state governments have been grappling with how to capture their fair share of the digital economy. Personal data has become one of the most valuable commodities in the world, and advertising platforms have found ways to profit enormously from it. But taxing this intangible gold has proven tricky. While it's easy to imagine taxing physical goods or services, digital advertising is more complex. How do you tax an ad that's targeted to someone in Maryland but is being served by a company based in California? Enter the digital service tax. In 2021, Maryland became the first state in the U.S. to introduce such a tax, targeting big tech companies that generate massive revenues from online advertising. Maryland's digital service tax is applied to platforms that generate at least $100 million in global ad revenue, with tax rates ranging from 2.5% to 10% based on their earnings. The tax only applies to the portion of ad revenue attributable to Maryland users. But here's the catch. Maryland prohibits companies from directly passing this tax on to advertisers. So instead, the burden falls on the tech giants themselves, companies like Google, Facebook, and Amazon, raising significant questions about how big tech taxation might change the landscape of the digital economy. How does the digital service tax work? Let's say you're fresh out of college, living in Baltimore, and you decide to search for a business casual wardrobe on Google. You click on an ad for Banana Republic, and suddenly you're deep in a rabbit hole about today's mall brand renaissance. For weeks after, Banana Republic ads seem to follow you around the internet, popping up on your social media and even in your email. That's data mining at work. Google uses your search history, location, and other personal data to serve you targeted ads, which companies like Banana Republic pay for. This is where the digital service tax comes in. Maryland's law applies to that advertising revenue Google earns by targeting users in Maryland, even though Google's headquarters are in California and Banana Republic is based in New York. According to David Tuck, a former IRS auditor and financial consultant based in Portland, this kind of tax is a groundbreaking development in how states handle digital commerce. While the IRS has long found ways to tax income, profits, and goods, figuring out how to tax online ad revenue, especially in big tech, is a new frontier. Legal challenges, big tech fights back. Of course, big tech isn't going down without a fight. Shortly after Maryland's digital service tax was introduced, several tech companies filed lawsuits, arguing that the tax violates the Commerce Clause of the U.S. Constitution, which prevents states from imposing undue burdens on interstate commerce. They also point to the Internet Tax Freedom Act, which prohibits state and local governments from taxing internet access and some online activities. The lawsuits claim that Maryland's tax, which specifically targets online platforms, goes against this federal law. For now, these legal challenges have been unsuccessful, but the stakes are high. As David Tuck notes, with the growing importance of digital services, the outcome of these legal battles could have wide-reaching implications, not just for tech companies, but for consumers and businesses across the country. Many experts expect these cases to eventually make their way to the U.S. Supreme Court, where the final decision could shape the future of digital taxation. Big tech taxation across the globe. The U.S. isn't the only country struggling with how to tax big tech. Around the world, governments are trying to figure out how to get their fair share of the digital economy. In Europe, for example, several countries have implemented their own versions of a digital service tax. France, Spain, and Italy are among the leaders, each taxing companies based on their revenue from digital services in their respective countries. These international efforts reflect a broader trend. Governments are increasingly focusing on how to tax digital advertising revenue, data usage, and other forms of online commerce. However, these efforts have sparked tensions, particularly between the European Union and the U.S., where many of the world's largest tech companies are based. For instance, the U.S. has expressed concerns that digital service taxes unfairly target American companies like Google, Facebook, and Amazon, while European nations argue that these taxes are necessary to ensure tech giants pay their fair share. As global conversations about digital taxation continue, it's clear that we're only at the beginning of what could be a long and complex journey toward a more standardized way to tax the digital economy. And what does this mean for consumers and businesses? While most people won't see the direct impact of the digital service tax on their daily lives, the indirect effects could be far-reaching. Tech companies might not be able to pass the tax directly on to advertisers, but they could still raise the prices of their services or ads, which could ultimately affect consumers. Small businesses that rely on affordable online advertising to reach new customers may also feel the squeeze. For businesses in the U.S., especially those with a strong online presence, understanding how new taxes like Maryland's could affect their bottom line is crucial. States across the country are keeping a close eye on Maryland's tax experiment, and more states could follow suit if it proves successful. This means that businesses need to stay informed and possibly even adjust their strategies to accommodate these new taxes. According to David Tuck, businesses should pay close attention to the legal challenges unfolding in the courts. If other states adopt similar digital service taxes, it could create a patchwork of regulations that businesses need to navigate, making compliance more complex. The future of digital taxation. As states continue to look for ways to capture more revenue from the digital economy, the future of digital service taxes remains uncertain. While Maryland has been the first U.S. state to implement such a tax, others are likely to follow, especially if the state's legal challenges hold up in court. But what does that mean for businesses and consumers in the long run? Will we see a proliferation of state-level digital taxes? Will the federal government step in to create a more uniform tax structure for digital services? These are questions that remain unanswered. But as the digital economy continues to grow, so too will the conversation around how to tax it. As someone who has worked extensively in the field of tax compliance, David Tuck emphasizes the importance of staying informed about these developments. Whether you're a consumer, a business owner, or just someone who spends a lot of time online, understanding how governments are responding to the challenges of the digital economy can help you better navigate the financial landscape. If you found this discussion of big tech and taxation interesting, you won't want to miss my next video. Check out Surprising Tax Deductions Even Criminals Can Use, IRS Tax Loopholes. In this video, we dive into the shocking deductions criminals have used and how IRS Code Section 61 impacts tax law. Watch it here.